Good afternoon and welcome to the Global Energy Outlook Forum 2024. Been a bit of a marathon day. We've been around the world, Asia, Middle East, Europe, and now the final section of our tour is to the Americas. And kicking us off today with the Americas is an outlook for LNG. Of course, the US has become such a significant exporter of LNG, a savior to Europe in many people's eyes, a golden goose to many others, I would think. Martin Houston, Chairman and CEO of Tellurian, thank you so much for joining us and kicking off the Americas section.
Thank you, Sean, and Happy New Year. Looking forward to a very exciting 2024 in all of the energy markets, of course, not just LNG.
Absolutely. And the year has kicked off with some challenges, but ultimately all of the noise around the world, yet energy demand seems fairly constant. But I think there's obviously oil is fungible source, a fungible commodity, moves everywhere. LNG less so until recent times, but still certainly it has its own unique stories in each particular corridor. And of course, the big story of focus recent times has been the US being the savior of Europe vis-a-vis LNG, and as Europe turned off or turned away from their natural historic supplier of pipeline gas and LNG, for that matter, from Russia. The US has been able to export and save them a little bit. Your thoughts on that narrative as a whole, i.e. the US is a savior for Europe in terms of LNG and gas over the course of the 2 years of Russia's invasion of Ukraine, where that might go looking forward?
Sure. Well, look, let's just row back on energy demand first, Sean. Clearly the world needs energy. And producers or prospective producers like Tellurian are supplying that energy. The markets are global. LNG is a global, and to use your word, increasingly fungible fuel. The market is becoming shorter. I'm not entirely sure that that's a good thing, and we can perhaps come on to that with respect to Europe in a minute or two. But clearly, this is a good time to be in the energy business, notwithstanding the headwinds and the narratives that we've seen discussed, of course, at great length in your part of the world, just a month or two ago. But LNG, of course, the juxtaposition of the Russian crisis on top of the growth in the supply of LNG from the United States, that was kind of a marriage made in heaven, although for all the wrong reasons and under desperately sad circumstances. But of course, US LNG has now become a significant fuel source for the European market. So just in terms of numbers, 34% of Europe's gas requirements come from LNG now, but only 46% of that come from the US. So I don't think it's necessarily the case that you immediately suppose that all of the LNG that goes into Europe comes from the United States, because it doesn't. About half of it comes from the US, which sort of gets to your slightly provocative question about the dominance of one supply being replaced.
Well, 50% is a big number when you've, I suppose, just come out of a situation where you found yourself in the European sense of being to great, significantly dependent on Russia. Not wholly, of course, it wasn't 100% of imported gas from Russia, but nonetheless, is there a sense that the Europeans aren't learning any lessons here?
I don't know exactly what you mean by less sincere, but
they haven't learned any lessons here. They haven't not less sincere, maybe that too. But they haven't learned any lessons from the point of being dependent on Russia, highly vulnerable, and now they're very dependent on the US.
Yeah, well, to some degree, but actually, if you look at it, LNG per se into Europe is about the same as Norwegian pipe gas into Europe. More plus or minus. There's about 9 BCM of difference on an annual basis, and only half of that LNG comes from the US. So, you could say that Norway has got a very much more significant position than US LNG. And of course, the other point is that US LNG is a diversified set of sources. It's not one supplier, it's a number of suppliers. So, if you look across, what I see as 6 suppliers today and more on the way, that's pretty diverse. And it's not necessarily the case that one supplier begets all of the suppliers and that they operate in any kind of concert, because they don't. So, I think it's an interesting question, and it's a very it's a very thought-provoking question as Europe thinks about its future energy supplies. But I don't think the narrative fits. I think you do have diversified supply, and I think there's a further point, Sean, which you need to think about, which is pricing and contracting. Europe doesn't contract on a long-term basis very much of its LNG. I think let me just give you the exact numbers. So it's about 2/3 of Europe's LNG is not contracted. And certainly from the US, only a very small amount is contracted. So it's a short-term supply, which of course is entirely consistent with Europe's narrative about fossil fuels on a long-term basis. And so I've sort
But
of
just to be sort of devil's advocate to the thesis, they have just done some very long-term deals with Qatar.
one or two, but it still doesn't move the needle in terms of Europe's exposure to on-the-day pricing versus the very stable prices that one can derive from indexing long-term contracts to either a Henry Hub index or to an oil index. So if you look at 3 curves, or let's put 4 curves on a graph: Henry Hub indexed LNG, oil indexed LNG, just in general terms here, TTF and JKM, you will see huge excursions, of course, that we all know and remember in TTF and JKM prices, yet a huge, a very flat line representing Henry Hub and oil indexed LNG, which shows that, it does beg the question whether Europe should be more dependent on LNG on a long-term contracted basis, because it takes the volatility out of the pricing. Now, of course, in our industry, we always expect that yesterday's volatility will never be tomorrow's volatility, that we've left it behind us and we're entering into, that wonderful expression from Christoph Ruhl many years ago, and, a period of eerie calm, I think he said. It was one of the great expressions, I thought. But it isn't the case that Europe will do that, because what we have in Europe is this rather paradoxical situation where Europe is making 30-year decisions 1 year at a time. Europe has a long-term need for fossil fuel energy, particularly natural gas, absolutely natural gas, but it's making those decisions on an incremental basis rather than looking at the long term. And look, I'm not going to rehearse the reasons why that is the case. You know that full well, and everybody on this call understands that too. But the point is, the political narrative doesn't fit the realities of what the energy sources required need in terms of contracting to actually go further to the point you're trying to make, which is Europe needs to be more dependent on long-term contracted US LNG. So rather than eschew it, it should be looking for it.
Well, let's take that point and look at this equation from the US perspective, of course, from Tellurian's perspective and from others in the business and those aspiring, that the European market could be quite uncertain. There's no long-term contracts, as you've just noted, and this turn away from Russia could be short-lived. I mean, if you look at the political narrative at the moment, that we're somehow moving into an endgame with Ukraine. There's exhaustion in it appears to be growing sort of exhaustion in the US and European political and wider public ranks for continued isolation of Russia and continued support of a war in Ukraine. Perhaps Mr. Trump is coming back to the White House, et cetera, et cetera. But the vantage point from the US, is Europe a dependent buyer, a reliable buyer, given all of those geopolitical context of uncertainty? And at the end of the day, they were addicted to Russian gas for one reason only. It was cheap. And it will be cheap again, I suppose.
Look, Sean, these are imponderable questions. I mean, I don't know whether the conflict is coming to an end as well. I mean, I agree with you that there's a great deal of fatigue in terms of both the protagonists and those that are supporting Ukraine. But that said, I mean, do you think it is likely, given the decision making of the EU 27 or 28 or whatever the number is these days, do you think it's likely that they're going to go back to the future? I'll give you my personal view. I think it's highly unlikely. I think it's highly unlikely that Russia will become a major supplier into Europe once again. I mean, I know we make, and I've already referred to on this call, we make decisions without necessarily looking at the past in the energy industry. We're pretty good at forgetting the past and having any belief that the past could occur in the future. But for me, I do not see that happening. And
well, I mean, whether we believe it or not, how important is the US LNG industry dependent? How important is the European market now to bankers, to the further development of LNG out of the US? Or is, so that uncertainty, while one might have their opinion about it, is still a relatively, big question to bet the $10 billion investment on.
Yeah, well, I don't see it that way, Sean. I mean, I robustly disagree with you on that.
Right.
I think Europe remains a stable and strong market for LNG. Look, Europe has replaced Russian gas. It is done. Now, demand or supply of gas is down 100 BCM a year at the moment, and some of that has been filled by renewables, as we would have expected. But that market has replaced, it has reset itself, and it's reset itself on a dependable long-term source of gas from LNG. What I gave a window into a few minutes ago is how that LNG could be less volatile from a pricing standpoint, which is what Europe gets concerned about. But that's to do with contracting, and that in itself is to do with making the juxtaposition of what fuels are going to exist in a market on a long-term basis, and making a realistic judgment rather than a political judgment which has no basis in supply. It is not feasible to say we're going to make 2, 3, 4 year decisions at a time because we're going to replace fossil fuels in no time flat. It's not happening. And certainly, that narrative did not come out of COP, which you were, very much a part of a few weeks ago. So for me, I disagree with your thesis that Europe is a risky market for LNG, or for US LNG for that matter. But let's just step back onto the macro. There are a lot of markets looking for new sources of energy which are not coal, and those markets represent big growth opportunities for LNG. You will have no doubt discussed in this conference those markets and the demand in those markets, but they represent a huge opportunity going forward. Now, I for one don't see that as a replacement of the European volumes. I see that as a supplement of more LNG from the United States, which has this huge low-cost resource of natural gas. And just to put that in perspective, look at the price of natural gas today. With all of the LNG supply that has come and continues to grow within the country, it is a long-term dependable source of low-cost natural gas, which will feed not only Europe on a long-term basis, in my view, but will also feed many, many other markets, many of which have not yet taken up LNG as a base load supply for their markets yet, but will do.
And in that respect, I mean, when you think of the European market, which of course is the biggest market in the world for LNG, obviously there's big Asian markets. China's growing significantly. We also have Korea and Japan and the big traditional powerhouses. Where does, from a US vantage point, all of that profile, as you say, does all of it give the confidence for further growth? I mean, we saw some in recent months. It jumps so month on month over 2022. U.S. LNG exports up 20+% year on year. I mean, this growth, can it continue? How important is Asia versus Europe for the growth of U.S. LNG?
Well, look, as we've said already on this call, the US is a fungible market. So, it doesn't necessarily correlate that US LNG will be produced for a particular market. It's a fungible source of LNG with no destination contracts within it, which means that it will be supplied on a global basis. So you will see, switching of contracts. You will see realignments of trade routes as more US LNG comes on. But to your central point, yes, I do see more US LNG coming to the market, and these are long-run projects. I mean, this is not a switch that you flick and say we'll have some more this year. These are projects that have been in gestation and development for quite some time and take quite some time to build. But I do see the trend continuing, and I do see that the US will continue to be the world's largest supplier of LNG and will continue to grow. And I don't see that stopping anytime soon.
When you think of the politics on both sides of this, in terms of the supply side and the demand side vis-a-vis America, obviously the US is in an election year. Does it matter who wins this election vis-a-vis that projection and confidence in US LNG? I mean, Joe Biden, of course, promised Europe, I don't know, was it 10 BCF a month? I can't remember, whatever large amount it was. Under the Democrats, the LNG has grown substantially out of the US. The US has reached record levels of oil production now, higher than pre-COVID levels, again under the Democrats. And now Trump, the Republicans are, generally the narrative seen as more pro energy, pro hydrocarbons, but yet the Democrats seem to be quite generous and as well. So I'm wondering, does it make any difference? The narrative seems to be, oh yeah, the Republicans are much better for hydrocarbons energy, but actually the industry's been doing pretty well under the Democrats too. So I'm wondering, from your perspective, big election year, does it matter which winner comes forward?
Look, I think it's a fair question, Sean. But as I've said already, in the terms of LNG projects, and to some degree the developments of the Permian Basin over a long period of time from an oil perspective, they are long-dated investments. I mean, these are investments that start and continue over long periods of time. So the cyclicity of US politics, whilst from a sentiment standpoint, on a short-run basis, it may make some difference in terms of the background noise, the trend will continue. Do I think that Mr. Trump is a better supporter of the industry? Perhaps he is. I don't know. Perhaps the Republicans, generally speaking, are more favorably disposed to the energy industry. But you're absolutely right. It has continued, and it will continue to supply the world with both oil and natural gas. I think these things are very cyclical, Sean. I mean, what was the famous expression that Lee Raymond came up with, quoted in one of the books about Exxon? Governments come and go. I mean, the industry, continues, and it will prevail. And we'll be sitting here having this conversation, if we're both lucky, in 10, 15, 20 years from now. And, not a great deal will have changed. Energy will still be.
What might have changed, and what is changing again as we sit at the beginning of a year. Last year we sat, there was a big tightening cycle ahead. Price of money soared through 2023. Now we're sitting at the beginning of a new year where the price of money may be on the easing side of the mountain. Rates signaling by the markets that we're going to be in a decline, some being a bit more optimistic than others. But what impact does that have on this outlook for US energy, US LNG, and all of the financing that's required, the price of money changing?
Look, I don't think it's had a significant impact. I mean, it's less the price and more the availability, I think, for me. The degree to which banks are, prepared to lend into this sector, the degree to which private money has been attracted to this sector. What I would say is that there has been a swing back towards the industry for one very simple reason. This industry continues to deliver superior returns for investors. Whether you like it or not, the energy companies are delivering high yields, which are available to investors, and you're seeing a swing back of private capital coming into the industry again. So I think the sources of capital have changed and will continue to change and evolve. I think the hubris around, this was a narrative for 2023, but the hubris around ESG in its context as that acronym swung away. And, you're seeing this sort of rebalancing, I suppose, to a practical set of outcomes, not only from a banking and investments and capital standpoint, but also from a realization about what the energy mix will be going forward, very much a thematic that we saw in COP28. So for me, I don't know, the price of money makes a difference. Of course it does. It stunts returns if you're dependent on a lot of debt or equity for that matter. But does it slow the train? I don't think so.
Speaking of slowing the train, let's put that China in that train. China in 2023 was coming out of COVID. A year ago, the big prediction was a year of two halves. China was going to come roaring back and save economic demand and energy demand in the second half of the year. It's still stumbling. My thesis at the beginning of 2024 is that we're kind of reaching peak China. Peak China in terms of geopolitical. I mean, every country in Asia seems to be building military bases against China. Peak China in terms of its energy consumption as it moves away from, build economy to think economy. Your thoughts as we start the year, the outlook of China, of course, the biggest importer of oil in the world, the biggest importer of LNG in the world, and every other commodity of relevance. The outlook for China, your thoughts?
Look, Sean, I think it's very difficult to make accurate predictions of China. What I would say is what I've always said, which is China is a 1,000-year project and it cannot be measured in quarters or years. And, China will continue inexorably with its growth and its demand for energy. That is a fact. It has a large population. We could argue about the growth of that population and, whether it's stagnating and so on. The point is it has a large demand for energy. I like by the way, your think. I mean, I think that is a nice way of putting it. But my sense, you can't ignore it. A couple of quarters doesn't mean you have to write it off. 4 quarters doesn't mean you have to write it off. I think you just, it's the point.
Would you subscribe at all to the fact to the idea that the 30 years of obviously 10% growth is no longer, but this 30-year there is an end of something at the beginning of something else, and the beginning of something else isn't as energy intensive.
I don't know whether I could say that or not. I mean, energy is the lifeblood of economies, and you can't replace energy with something that doesn't exist. And China is very dependent on oil and gas and coal for that matter. And I do see the cycle towards replacing more coal with natural gas as being a real one and something we should keep an eye on. But I think the way to look at it, I think from an energy perspective, rather than me commenting on the whole of the Chinese economy, is that demand is there and it continues to grow and it continues to attract natural gas. It continues to buy more and more LNG in the marketplace. I think that trend will continue. I'm not a bear by any means on China from an energy perspective. In terms of trends and cycles, this is a cyclical world. It's a cyclical business, and things will change. But energy demand.
It's also a world where China is making very big leaps forward in terms of electric vehicles and renewables, and I mean it's a very significant part of their energy fuel mix going forward. In time, the mobility within, at least on vehicular mobility in China, will be very much EV.
I agree with that. I mean, you saw the statistics yesterday about Chinese EVs, and it's a staggering growth in a very short space of time. And it's not just one supplier, by the way. There are many very sophisticated producers of electric vehicles, which are appearing on the roads, particularly in Europe, with brands you've never heard of before. So it's real, and it's happened almost by stealth. It crept up on everybody. But my point remains, energy demand, is there. It continues to grow as population grows, and right now that favors natural gas. And from where I sit, it favors natural gas from one of the places where cheap natural gas will continue to be supplied from, the United States.
If we look at the fungibility nature of gas, obviously we've seen it in oil, despite all the sanctions, etc. Russian oil has continued to flow every direction it can and get to market successfully over the last 2 years, despite occasional noise about getting more robust in policing the sanctions. But what about gas? Where does gas go? I mean, Russia faced shut-ins. Does it get gas to market through further development of its Asian pipeline? I mean, where do you think the fungibility of Russian gas goes? If you feel that the Europeans won't turn back to Russia, what does Russia do with all its gas?
I have no idea, Sean. But as you said, quite succinctly, Russian energy is finding its way into the marketplace. And by the way, politics and dogma and ethics aside, the world needs that energy. I mean, it needs that energy to balance the supply demand, and it needs it to control prices within a band, which I think makes affordability, makes it affordable for particularly buyers in Europe and Asia. So my sense is that it will continue. It will find ways to market in different ways, through LNG, through pipe going east. There are other markets that are peripheral markets that are buying it, domestic growth as well. So I don't really know, but it's successfully found a way to market so far.
Let's just wrap up, Martin, with putting you a little bit on the spot. The outlook for prices in the year ahead, vis-a-vis, obviously 2022 saw these bionic LNG prices off the charts, kind of once in a lifetime kind of thing. Sobered up a bit in 2023. Where do you think we're going in 24?
Tell me what the weather is, and I'll tell you what the prices will be.
Warmer, it looks like. My goodness.
It does. I mean, we've had there's a bit of a cold snap going on in the northeast of the US right now. But here I am in Houston. It's moderate temperatures and pouring with rain. There hasn't been much of a winter. It takes a winter to create the volatility. We haven't had a winter anywhere, on a global basis. So, show me a winter and I'll show you a high price.
Yeah. Finally, we seem to be in a continuous set of years where black swans are big factors. Anything that you see as your black swan that you would sort of keep an eye on, something that the rest of us aren't aware of, or any black swans you see out there?
No, I don't think so, Sean. I mean, I think the things that we've all, talked about over the long run as being things that will come and start to impact, I would say, Western society have started. Migration being the number one. It's a global phenomenon, and that will continue, to trouble Western nations. I think behind that, if you are a watcher of the long-term macro, I think you've got to keep your eye on water, and you've got to keep your eye on food, and those two things, I think, in addition to migration, are the non-energy related black swans, but they're not really black swans. We've known they're out there for a long time, and it's starting to come home to roost. I think the big question, if you want a question mark for 2024, Sean, I mean, I would say, with a sub-Saharan Africa, what's the story in Africa? Because that's the dog that hasn't barked yet, in my view, and it's well worth keeping an eye on what happens in the South. I mean, and for that matter, you could extend that to parts of Latin America too. I think that may be part of the story for 2024.
Yeah, global South, Venezuela coming back or not, or maybe even the re-election of Joe Biden being the black swan of 2024. We'll have to wait and see. But we'll wrap it up there with a beautiful thank you, Martin Houston, for your interview this afternoon on the Global Energy Outlook Forum 2024, kicking off the Americas session. Thank you so much, Martin.
Most welcome.